Good morning, everybody. This is the live market open for March 3rd. It's Thursday. I'm very sorry for the late start. We had some issues here. Anyway, here we are. I hope you're all here in the room. Sorry, my name is Yohay Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As always, we'll talk about the recent developments, charts and levels, the next 24 hours, and your questions. In general, we had lots of talk yesterday about the political implications of Super Tuesday. Basically, Clinton and Trump are getting closer to clinch the nomination. We did not see any movement in markets regarding that. Oil prices have gone up, better mood in markets in general. ECB is still pressuring the euro. But in general, the most important thing is better market mood, but not all figures have been positive, okay? So if we start from the UK, we had a disappointing construction PMI. Good morning, Fabian. Sorry, everybody, Fabian, everybody, for the late start. Disappointed with 54.2 points. This has been the strongest sector. Well, it is also weakening in the UK. This did not stop the British pound from recovering. It fell probably too hard on all the Brexit talk. And even though there's opinion polls show that the chances for a Brexit are still wide open, the pound did recover alongside commodity currencies, alongside better market mood, stocks in Asia and Europe, in the United States. One of the things contributing to the better market mood is that the ADP report in the United States, the non-farm payrolls over there, beat with 214,000, around only 190,000 were expected. This was a bit countered by a downward revision for last month, for the month of January, but it didn't matter too much to markets. Another thing that didn't matter too much to markets is that crude oil inventories jumped a lot. They jumped 10 million at least. On the other hand, we had distillates, gasoline. They were a bit more stable, but anyway, it's not a good report for the market mood because more oil means lower oil prices. This did not affect oil prices. Markets probably are just happy to see the ECB about to pump more money. The move made by China earlier this week to cut the reserve ratio rate. So the market mood remains positive. Well, bon dia, Sinatra. Good morning, Fabian. Again, good morning, Carol. Apologize once again for the late start. Anyway, I was talking about market mood. Specifically for Australia, it was the trade balance that came out better than expected. Smaller deficit than expected that helped the Aussie reach higher ground. We'll talk about that soon. And the Chinese services PMI was ignored by the Aussie and also by Chinese stock markets, which are up. So we had a miss there at 51.2, still showing growth, but slower than expected in a sector that was supposed to take over manufacturing in Australia. So let's look at the chart. When I talk about a positive market mood, no, this is not the best example to start with. This is the best example. Pound dollar. Okay, now it's sliding a bit this morning in the past 30 minutes, in the past 15 minutes or so. But in general, it made the break above 140, made the break above 140.50. I still see resistance over there at 141.25, but perhaps we'll have to adjust these lines. Further resistance 142.30. Again, there's no reason for the pound to rise. It's just a correction of the huge fall, whereas Sandra says huge. Anyway, this is again not so good figures in the UK. Brexit is still an option. Of course, the story is a bit fading away because the attention span is small, but anyway, we had a breakout to higher levels. Dollar yen also reflects, the other side, a weaker yen, of course, less demand for safe havens. So we reached a new high yesterday, went above 114. The bounce over there at the former support line of 113.20, it works very nicely as resistance. 114 is still some kind of support, followed by 115, okay? But in general, dollar yen, despite perhaps a small slide just now, is still higher in general because of the better market mood and thanks to better US figures, which have their best impact on dollar versus the yen. Loonie, well, we had the positive GDP figure. We fell all the way to even below 134. We had then a move to the upside, sort of shattering the old double top, which then turned into support at 134.60. So it isn't such a strong line anymore. Let's put further support here at 133.90. Anyway, so now we're seeing some kind of move to the upside, but the general trend in the Canadian dollar is better. That means falling dollar CAD. Let's see if 134.60 still remains relevant or not anymore. Okay, but it's better days also for the Canadian dollar, despite a fall in oil prices. Despite the bigger oil inventories and thanks to still stable oil prices, the Canadian dollar is of course also enjoying the better than expected GDP earlier this week. Aussie, here we have a nice break. We haven't seen these levels in quite some time. Above 73 cents, reached a high of 73.22 or something like that. I'll have to zoom out even further to see the last time we were trading at these levels. It's actually back in December, so we're at the highest levels for the year for Aussie dollar. Further resistance 73.60, 72.80 turns into support. Okay, I see here a question, a comment. Hi there, Thompson. Sorry again for the late start. I hope you all are on board, and of course all your questions are welcome. Okay, let's continue. Kiwi dollar had the milk auction earlier this week, sorry, and it has, when the market mood improves, it has a bigger effect. 66.77, 67 works very nicely as resistance. The range remains 65.50 to 67. Dollar Swiss, still battling with parity, 99.77. Some support there at 99. Remember, it's affected by the Swiss National Bank. Euro Swiss is still depressed to the downside, perhaps awaiting new intervention. 108.40 and not going anywhere fast. I would say that 108.70 is some kind of resistance, or 108.60 perhaps. But anyway, these lines are very arbitrary, of course, because of the Swiss National Bank. Euro pound continues its fall because the euro, a pair that I skipped, but don't worry, I'll return to euro dollar, is still looking for a new direction, waiting the ECB in 7 days, in 1 week, and the pound made a nice recovery, so we fell under 77.40, the former line of support and resistance. 76.60 is the next line there. Quite a big turnaround from the highs of 79, nearly 30. Okay, so we're already over 200 pips below the highs with this big recovery of the pound and the struggle of euro dollar. We talk about a struggle of the euro. Also the yen is suffering, so currently we're under 124, a bit moving up from the lows of 123, or even lower levels that we had at 122. 125 remains resistance. The trend still remains to the downside because, the euro is still under pressure, and the yen is not enjoying. Of course, there are no safe haven flows, but it's not doing that bad. Okay, so here we are. We have a question here. Do you think that pound dollar extend the correction, or can it go up? Well, regarding pound dollar, sorry, I'm not sure it has much more steam. We have a big event coming up in about an hour, the services PMI. We'll talk about that. That could have a big influence because markets this morning in Europe are a bit more stable, not rallying anymore. So perhaps the pound will respond a bit better to fundamentals. Yesterday we had a small response to the construction PMI, but it was very short-lived. Okay, so we had the pound suffering because of the data, but it was very short, and then we had it continue recovering. Okay, now let's finish. One more currency pair, one of the most popular ones, pound yen, 160.56. Again, weaker yen on the lack of safe haven demand, and the pound exactly the opposite, enjoying safe haven demand. Resistance only at 163.80. Support is at 160, even though it's a problematic line at the moment. 158.50 remains support, stronger support, followed by 156.15. Yeah, and let's take a look at the price of oil. Well, it's struggling to really break higher. It made this short-lived move above $35. I would say, well, maybe 35 remains still a resistance line because it's a round number. On WTI crude oil, of course, Brent has different numbers on it. Anyway, 32.30 is support. Perhaps we're seeing it top out. Remember, there's just too much oil sloshing around the world. We've seen that yesterday with inventories. I'm not sure this rally can prevail. Now we're seeing a small slide, but of course it's not significant at the moment. So perhaps pound dollar can lose some of its strength. Answering your question, perhaps other commodities can lose their strength. What's going on with euro dollar? Euro dollar is still suffering the effect of the inflation figures we've seen earlier in the week in the eurozone. Back to deflation, minus 0.2. On core inflation, we're only at 0.7. Both were big disappointments. Both imply more action from the ECB. Okay, 108.68 is the current level. Yesterday we had a dip to lower ground. It was short-lived. I still see 108.35 as some kind of support. Remember, it's not that strong. Euro dollar is grinding lower. It made these moves. So each time it made a move to the downside, got stuck, found itself in range, made another move to the downside, traded here in range, another one. Are we seeing a repeat, or will we see a correction from here? I believe the pressure will continue. And towards the ECB meeting, what we had last time with the big ECB meeting of December is that we had a lot of pressure on the euro. But when these huge expectations became reality, then of course things change and the euro bounced to the top side. Anyway, let's see what happens here. Resistance 109.60, 110.70 are lines to watch. To the downside, 107.70 and 107.10. Okay. We covered currencies. We covered yesterday's events. Let's talk about today's events. At 9:30 GMT, we have the UK services PMI, as aforementioned. This is the biggest sector in the UK. I think it should have already a big impact, okay? Because it's the last one and the biggest sector. Let's zoom in the screen here so we can see it better from your screens. Anyway, we're expecting there a small slide from 55.6 to 55.1. This is considered a forward-looking index because it's a survey of what purchasing managers are expected to do in the future. Okay, so 55.1 is the expectations. Remember, the 50-point mark separates contraction from expansion. We had, let's see if, so we're still expected to be above 50, but perhaps we'll have a disappointment there, like with the other PMIs. As always with UK releases, watch out for the movements before the publication. We could have markets front-running, a weak figure, a bad figure, and then the actual reaction to the release will be muted, will be a buy the rumor, sell the fact, or something like that. So don't get overexcited. Well, maybe it's an opportunity. Sorry, maybe it's an opportunity to go the other direction. But sometimes you can see the pound rising and then the figure coming out way beyond expectations. Not a small beat, but a huge beat. And then you can see it even extended. But if you have only a small beat when the pound is front running it and moving forward, then you can see a sell-off. Same thing goes for the other direction. If we'll see the pound suffering before the release and then we'll have a weaker than expected figure, it needs to be really much weaker than expected for an extension. Otherwise, we just have a bounce, buy the rumor, sell the fact. Okay, that's one figure for today. And we also have, I didn't put it here on the slide, but we have Eurozone retail sales. It comes after the German and French releases. So yeah, so it's expected to show a small slide of 1.3 instead of 1.4 last time, and month over month plus 0.1 instead of plus 0.3. Very low expectations. To your question, Carol, GDP report is coming not in 3 minutes, but in 1 hour and 3 minutes. As you can see here on the FX Street calendar on Forex Crunch, it shows you the time until the publication. Okay, so it's 1 hour, 3 minutes to go. It's 10:30, and the calendar is of course adjusted to my time in the Eurozone, and yeah, I'm in Spain, so it's a Central European time and not in the UK. Anyway, it's 9:30 GMT and in the UK, or 10:30 here. All right. Yeah. So we talked about that. Then we have the more important figures coming out from the United States of America at, first of all, at 1:30 GMT. The initial jobless claims for February. This is the weekly. Sorry, for February 26th, for last week. So expected to be more of the same, a small slide from 272 to 271. We had long weeks of disappointments. Okay, this is an improvement, but we had a few weeks of disappointments, and then we had better than expected figures until the week before last week. Yeah, now we had it bounce. Let's see if it remains the same. I wouldn't say it's a significant hint towards the non-farm payrolls. Well, the bigger one comes out later. Anyway, also at the same time, we have the non-farm productivity. It's the final figure, unit labor cost, the final, not expected to be of high importance. Then we have at 3 GMT, actually 15 minutes before, we have the final services PMI for market. Market is less important in the United States in comparison to ISM, but when we had the preliminary figure of market coming out, I think it was last week, and it came out under 50, that means in contraction territory, showing chances of a recession also in the services sector. It was quite alarming. It was quite bad for the US dollar. Okay, so let's see what the final figure says. Expectations are for a confirmation. This doesn't change too much. And then more importantly, the ISM non-manufacturing PMI, a long name, a shorter name would be services sector report. What's going on in the biggest sector in the United States? What are the forward-looking expectations? Last time, a month ago, it was a big disappointment. Huge. It came down to 53.5, following the employment component as well, and it hit the dollar really, really hard. Okay, this is the chart. Okay, the depths of 2008. Anyway, we've seen since, well, I think, yeah. Well, we haven't fallen to these lows. Yeah, in 2014, no, sorry, right here. And, well, the report for February, no, the worst seen, I guess, April 2014, nearly 2 years with this big fall here. Okay, so we got used to seeing these figures even close to 60 points, which reflects very strong expansion. We had a small deterioration, and the fall last time from 55.3 to 53.5, 2 points, but very significant in the biggest sector. It hit the dollar really hard. That was released on February 3rd. Let's just, for example, look at the daily chart on, I want to show you just how important this publication is. Let's take euro dollar. That's February 3rd, okay? This big leap here, when euro dollar went all the way from the lows of, well, under 110, 109 into a bit, to all the way to a high of 111, yeah, above 111. Big leap. Okay, so the services sector figure is very, very important. This time expectations are low because of, well, expected to remain low because of what we've seen last time in the ISM non-manufacturing PMI and the market one. Anyway, it's a very significant report. Not only a hint for the non-farm payrolls, but also the biggest hint for the non-farm payrolls. Eventually, the NFP wasn't that terrible, but the dollar remained weak because of this figure. Okay, so that's a big event for today. It'll clearly overshadow factory orders, which are expected to rise 2%, but we know that manufacturing is a smaller sector and it has less impact, and that it isn't doing so well. So the big focus will be on the ISM non-manufacturing PMI. Okay, yeah, no worries, Carol. That was the house price index. Yeah, it's not that important anymore in the UK. Used to be important. Let's see what it came out anyway. Quite a disappointment there. It was expected to remain unchanged, and it fell by 1.4. So it's not good news for the UK. Well, year over year, we still see a rise. Let's see if it had any impact. I mean, if we can attribute that to something, I don't think so. It used to be more important. When no, I wouldn't say it has an impact. Anyway, we talked about the importance of the ISM non-manufacturing PMI. For those of you trading late at night, we have Australian retail sales in general. It's a very busy week for the Australian dollar, RBA rate decision, PMIs from China. What else do we have this week? Well, the GDP figure, which came out much better than expected in Australia, gave a real boost to the Australian dollar. Also, Canadian GDP came out better than expected. Anyway, now we have trade balance came out better than expected. Now we have the Australian retail sales to sort of give the grand finale for the series of Australian releases. A small rise of 0.4 is expected over there. Okay. Any questions? We're seeing euro dollar edge up just a bit, still in the range, still looking for a new direction. We're a week from the ECB, but I've published on Forex Crunch quite a few analysis pieces regarding the ECB. Everybody is beginning to talk about that. It's 1 week away, but it's such a big decision because of the current situation that, yeah, it's very important for the euro. I hope we will not get a full week now of range trading in a very narrow range until it explodes with the ECB. Question here, do you expect the pound report to make your pound rally or fall? Well, it depends on the outcome. I think markets are a bit more stable, so what I can say is that it will be a bit more, that the pound will be a bit more vulnerable to any kind of release, if it's a beat or a miss. Currently, we're seeing euro pound bounce off the highs because of a weaker pound, not very significant, okay? It's 20 pips off the lows. Anyway, we've seen the pair, this cross reverse its trend thanks to a big correction in the pound. I expect if you ask what my expectations are for the services PMI in the UK, I think it'll be worse than expected because we've seen other PMIs going the same direction. So we might see a bit more pressure on the pound to send it perhaps back down. But as we're seeing, the pound is weaker against the euro, the pound is weaker against the dollar. So if it's not a big miss, I think we can, it'll be a small slide for the pound and not something devastating. It needs to be really terrible for a big fall. Anyway, I would be very surprised if we have it come above expectations, okay? But you never know with these figures. Anything's possible. Another question from James. What is the direction of euro dollar today and tomorrow? I think the pressure continues on the euro because we don't know what's going to happen next week with the ECB. I think that the retail sales report will probably be ignored. So pressure on the euro doesn't mean it'll fall down, but it means it could remain depressed. More chances of falling than rising. Of course, as I said, the ISM non-manufacturing PMI is very important. If we have another big fall in the ISM non-manufacturing PMI, I think euro dollar could rally, pound dollar could rally, because it would mean a big delay in the US rate hikes, which is already pushed back anyway. But anyway, it's negative for the dollar, and it could be a big market mover, as we've seen very clearly this time last month, right? Okay. What's your bias on pound yen? I have no clear bias. I think it's perhaps the strength of the yen has ended, but perhaps also the strength of the pound, this recovery of the pound has ended. So I'm not sure what's the next direction. I don't have a clear bias. Perhaps a lot also depends on this, on today's ISM non-manufacturing PMI and tomorrow's non-farm payrolls. If both figures are good, it could be good for the dollar against the yen, good for market mood, and good for pound dollar. So if I want to take the optimistic view on the United States, it could also have implications on pound yen, which does not consist of the US dollar in the middle, but this could have a bigger effect. I don't see any market moving thing at the moment in the next, at least until the end of the week, from Japan. From the UK, of course, the services PMI is important. And let's see how things roll from here. At the moment, pound yen is trading correlated with pound dollar. Yeah, it's quite clear. What we're seeing here in pound yen is recovery of the pound, which is also clearly seen in pound dollar. Dollar yen is a bit more stable. General, the trend has been also recovery here. After we reach this double bottom at 111, we're seeing some kind of a recovery, okay? We had here the first touch of 111, which triggered an intervention by the Bank of Japan. I wouldn't attribute the rest of the rise to this intervention, but actually to better market mood, which later deteriorated, and then we have some kind of recovery. So for the yen, it would be more dependent on US figures. For the pound, and new opinion polls, and the services PMI in the more immediate future. For what did I want to say? For the Bank of Japan does convene next week, I think. We'll have a preview, of course, as always, tomorrow morning. We'll have a preview of all the US and other events coming next week. We do that every Friday, and it's then also available as a separate clip on FX Rate and also on Forex Crunch. Yeah. Any more questions? Well, let me remind you all. Tomorrow is the non-farm payrolls event, of course, and we'll be covering it live with Adam Button, Valeria Bednarik, Dale Pinkert, Mauricio Carrillo, and myself, beginning from 1 GMT. That's 2 in the old continent, in Central European time, or 8 a.m. in the United States. Okay. So let's just do a small recap of the figures we had so far this week. On Monday, we had a big event, only one important one, but it was huge. It was the Eurozone inflation figures that came out worse than expected. It continues pressuring the euro. Okay. And then we had figures that were a bit more ignored or mixed. Chinese PMIs came out worse than expected, but no, China is doing okay. The Aussie is doing well. The RBA, Reserve Bank of Australia, is not worried. Canadian GDP came out better than expected, helping dollar CAD push below the 134.60 support line. ISM manufacturing PMI in the United States came out a bit better than expected, but still showing contraction. So also this adds to the complicated picture of today's non-manufacturing PMI. On one hand, we had a poor read for February on the services sector from market. On the other hand, the manufacturing survey from ISM came out better than expected. So it makes everything more complicated. Anyway, we had Australian GDP beat expectations, also helping the Australian dollar reach the highest levels of the year. ADP non-farm payrolls, well, bottom line, it was better than expected. Of course, if we ignore the revisions. Oil inventories, they jumped by 10 million. That's a lot. Crude oil, I believe this will come to haunt oil prices eventually. Today we have jobless claims and the important ISM non-manufacturing PMI. Oh, I forgot to mention this event overnight. Let's just verify that it's indeed published. No, I don't see that on the calendar. So So I'm just confusing you with this one. No Chinese release. Forget about what I said. But we do have the Australian retail sales. And that's basically it. We have some figures tomorrow also. We'll talk about that tomorrow from other places. But really, the main event tomorrow is the US non-farm payrolls. Let's just take a quick peek at that. Remember that expectations might change after today's ISM non-manufacturing PMI, but currently expectations stand on a gain of 190,000 jobs, better than last month's 151,000. All right. What's more important is the average hourly earnings, or as important, sorry, not more important. Last time we had an annual rise of 2.5. Let's see if it's relatively high, better than most, what we've seen most of last year. We already reached also a high of 2.7. Anyway, we broke out of that frustrating 1.9 to 2.3 range. That will be interesting to see if we have a break above there. Average hourly earnings on a monthly basis, well, they were jumped a lot, 0.5 last time. This time we're expecting a more moderate 0.2. The unemployment rate, less important for the immediate market move, but important for politics, of course. Expected to remain at 4.9. We cannot talk about the unemployment rate without mentioning the participation rate, which was at 62.7. And that's about it. We also have tomorrow the trade balance. Well, we'll talk about everything tomorrow. Why am I talking so much about an event which isn't coming today? And because it's the most important event of the week. But anyway, there's lots more stuff going on. Any more questions? We'll soon get to the wrap up for today. Okay. Once again, apologize for the very late start. We usually don't have any issues, but these things happen. I'm very glad we could make it, and I'm very glad that everybody's here in the room asking great questions. Let's see if I can pick up more headlines before we reach. No. All right. Oh, I see another comment here from Fabian. So today the economic release is all about GDP and US dollar. Yeah, in the morning I would say it's pound related because of the services PMI, but then the US figures are more important. I suspect that we could see some slide in oil prices today because there is no justification for them holding up, so it might also become interesting for the Canadian dollar, but that's not based on any data. It's more pound in the morning, perhaps for a short time, and then back to the US dollar. Yeah, with the build up towards it's the biggest hint towards tomorrow's non-farm payrolls and an important event on its own. Okay, let's begin the wrap up. This is the wrap up for the live market open for Thursday, March 3rd. We have a better market mood, higher oil prices despite not so good figures. Markets are ignoring the political implications of Super Tuesday. That means Donald Trump's danger. The ECB talk is intensifying and putting pressure on the euro. We had figures yesterday were quite mixed. UK construction PMI disappointed. On the other hand, ADP NFP came out better than expected, but with the downwards revision. Crude oil inventories jumped a lot, but it wasn't that. But distillates and gasoline were sort of okay. Australia continues enjoying good figures, a small beat in trade balance, smaller deficit than expected, and the Australian dollar is at new ground, and the Australian dollar ignored the Chinese services PMI, which was not good. Okay. Let's look at currencies. Euro dollar remains under pressure towards the ECB decision in 1 week's time. It's off the lows. It's even moving a bit higher. Well, we could add another resistance line here. Oh, sorry. At 109 more or less, but Anyway, we're in a narrow range. I think that I see the trend still to the downside, 107.70, 107.10, to the downside, to the upside, perhaps 108.90, 109, and then much more significant resistance at 109.60. Pound dollar enjoys its time in the sun despite weak figures, despite ongoing uncertainty, the better mood in markets, the rise in stock markets, and the correction after falling so sharply sent it above 140. Resistance at 142.30, and before that 141.25. Support at the round number of 140, and of course the lowest support line is 138.40. Dollar yen, better market mood. Well, in the past hour or so, not a bit, we're seeing a correction, but in general the trend for dollar yen remains to the upside. We found support at the former resistance line of 113.20. High resistance, I would say 115.25. Former line here of 114 is, well, basically shattered. Dollar CAD, we had it break, a big break to the downside under 134.60. The line, I think, is still relevant, even though we had it also walk around this line quite a bit yesterday. 133.90 is support. A lot depends now on oil prices. Aussie dollar, really looking great, made a break above 72.80, which was a very clear separator of ranges in the past, and now it's yeah, we are sort of steadily above this line. 72.80 support, 73.60 is resistance, and Kiwi dollar is at the upper end of the range. 67 works very nicely as resistance, 65.50 support. You see your question here about the Kiwi. Latest fundamentals is that we had milk prices rising more than expected. That was good news. It helped the recovery. But earlier this week, we had building consents and business confidence miss. Tomorrow, next week, we have the RBNZ rate decision, and my tendency is a bit to the downside. I think they'll try to push the Kiwi lower, but so far it's showing us what range trading is. Trading all the time in range. Let's talk about the events for today in this wrap-up. Services PMI in the UK expected to show a small slide, but still solid growth, around 55 points. It's the biggest sector in the UK, very important for the pound. Now, though, we have some calm in markets and some referendum talk is a bit at the back burner, not too far from the forefront, but anyway, could have a big impact at 9:30 GMT. 1:30 we have US jobless claims expected to remain unchanged. The big event for today is the services sector report in the United States. The US ISM non-manufacturing PMI. Reasons to be worried was the big fall last time and the big impact on the dollar. And in addition, markets preliminary ISM non-manufacturing PMI, which came out worse than expected. On the other hand, recently we've seen US figures improve, including the ISM manufacturing PMI. Anyway, it can really go both ways. It'll overshadow factory orders at the same time. It's also, most importantly, perhaps, or not, well, as important, it's a hint for tomorrow's US non-farm payrolls. And just one last thing, Australian retail sales at night. Let's see if it continues the winning streak of events for the Australian dollar. And yeah, and the tension, of course, continues building not only towards the ECB, but also towards the non-farm payrolls report tomorrow. Okay, so thank you very much, everybody, for coming and hanging on despite the late start. Sorry once again, and yeah, and wish everybody a safe and successful trading day. We'll be here tomorrow with a full non-farm payrolls preview. So I guess that's it for today. Thank you for coming, and sorry again for the late start, and see you tomorrow. That's it. Thank you, and bye-bye.